please be started at our end.
Start recording also?
Yes.
Once you are starting.
Yes, sir.
I'll be keeping my video off preferably because internet poor message is coming.
Madam, start.
Good evening to all and namaskar. We are welcome to everybody in the webinar on blockchain technology impact on accounting and taxation, organized by Regional Council and Chapters Coordination Committee jointly with Information Technology Committee. Today we are having with us our President Sir, hopefully will be joining soon. We are having with us our Vice President Sir. Today we are having with us our Ashwin Dalbari Sir, Chairman of the IT Committee. Sir, welcome to the event. We are having with us Dr. CMA Dr. Murthy Sir, CMA Dr. KCH Aviation Murthy Sir. Sir, welcome to the event. We are having CMA Guru Prasad Sir, who is a very learned speaker, and we have heard him in the first portion of this first episode of the blockchain demystified. So we are eagerly waiting for having to learn more today. So we are very much delighted to have you, sir, with us. Before we proceed further, so I am requesting our team to have anthem of the institute, please.
असतो मा सद्गमया तमसो मा ज्योतिर्गमया मृत्योर्मामृतं गमया मा सद्गमया तमसो मा ज्योतिर्गमया मृत्योर्मामृतं गमया असतो मा सद्गमया तमसो मा ज्योतिर्गमया मृत्योर्मामृतं गमया ॐ शान्ति शान्ति शान्ति.
Thank you. Now I will request our Vice President Sir to address in the event, please. Sir, over to you.
Yeah. Thank you very much, Dr. Smita Chakravarti ji. And wishing everyone happy, healthy, and prosperous days. Respected Chairman for our region chapters and coordination committee, our CMA Dr. A2Z Murthy ji, Chairman for IT committee, Dr. Ashwin Dalbari ji, and our eminent speaker, CMA Guru Prasad, and eminent participants, wishing everyone happy, healthy, and prosperous days. As has been pointed out, this is the second of the series of blockchain technology. Blockchain is a system of recording the information in a way that it makes it difficult or impossible to change, hack, or cheat the system. A blockchain is essentially a digital ledger transaction that is duplicated and distributed across the entire network computer systems of the blockchain. So a blockchain is a public digital ledger of transactions that records information in a way that makes it difficult to hack or alter. The technology allows us to secure a way for individuals to deal directly with such neither without or any intermediary or government or others intervention. So this technology is helping, and this is actually moving forward. In fact, just now our IT chairman Ashwin Dalbari ji was highlighting that the latest for job whatever who are taking the vaccine, the certificate is issued in blockchain technology. So it will be having a very good this. So blockchain in costing as well as in accounting world, it will be going to create the mass things. And our institutes have brought the guidelines on mastering blockchain technology also, and we will be having further guidelines on the blockchain technology, which will be very much beneficial to our members. And we can use the blockchain technology for our cost audit, costing purposes, and which will be enabling our client to use it very effectively. All these things will be highlighted by our eminent speaker, CMA Guru Prasad, and who is a well-known and effective and efficient in this. I am very much thankful to Dr. CMA A to Z Murthy as well as IT chairman, our CMA Ashwin Dalwadi for arranging the program, and it's a series of program and will be definitely adding value to our members, which will be really a knowledgeable session. Thank you very much. Wishing everyone happy, healthy, and prosperous day. Thank you, thank you, thank you. Good day, good day.
Thank you, sir. Now, as our president sir has not stepped in, so may I request our Ashwin Dalwadi sir to introduce the topic as also as the speaker to the event, please.
Thank you,
Ashwin Dalwadi
Sumita
sir.
ji.
Yes.
Thank you, Sumita ji. Good evening. Vice President Raju Iyer sir, our A to Z Murthy sir, Guru Prasad ji, participants, and my colleagues in the office. See, today I have got, once again, I'm going to introduce today our today's speaker, Sri Guru Prasad ji. In fact, part of the introduction has already been given by Raju Iyer ji. So formal and earlier also we had introduced him on 21st of June, wherein we had a program on blockchain demystified. It was very good program and it was very well attended by members. There were around 320 plus participants on this platform, and many more were there on the YouTube also. So it was one of the most successful program. And now today we have with us Sri Guru Prasad ji, who is going to not only demystify the blockchain, but he is going to share with us impact on accounting and taxation. See, Guru Prasad ji is a learned, very highly learned, I put it this way. He is a commerce graduate from Vivekanand College, University of Madras. He is ACA, India, ACMA, ACS, certified member of Institute of Management Accountants, New Jersey, USA, associate member of Association of Certified Fraud Examiners, Texas, USA, fellow member of the Institute of Financial Accountants of UK. So in short, he is a very highly learned fellow, and top of it, he is immediate past president of IMA USA's Bangalore chapter, which celebrated its 100th year during his tenure. And he has been conferred a prestigious IMA Champion Award 2020-21. He has been conferred Platinum Level Leadership Award by IMA USA. So thus he is a highly learned speaker who loves to teach, who loves to share his knowledge with us, and he is being invited regularly by institutes of high repute from India and abroad. I put it this way, that we are lucky to have this kind of person who is well versed in a recent current topics like blockchain, the what we call it the technology part. He has taken many lectures on ethics. He has written books also, and artificial intelligence. His chosen topics are artificial intelligence, even blockchain, fraud, triangle, and examination. See, thus he is a good, prolific writer, faculty, and panel speaker on various topics. I am sure I'll reduce his very long bio, this profile, but I am sure we have seen him in a last webinar. So I think more than this, I would definitely, while going through his profile, I was really amazed, and it was very lovely, and I saw that it was very impressive uh, profile of Guru Prasad ji. So I am happy to have a very good presenter with us today. Thank you. Over to you, Sumita ji.
Thank you, sir.
Welcome,
I'm
sir,
pleased,
President sir.
yeah, I'm pleased to inform you that President sir has joined. So, President sir,
Very good evening to all of you. Very good evening to all of you.
thank you, sir.
Very good evening, sir.
Sir, it is over to you. You please say
Yes.
something on the
Okay,
event.
okay.
We request you to bless us.
Yes.
Yes.
My beloved council colleagues, honorable faculty members, honorable panelists, my my colleague in the Central Council, B. Raju Iyer, Vice President of the Institute of Cost Accountants of India, my beloved colleague Ashwin Dalwadi ji, and my beloved colleague K. Chiranjeevi ABSN Murthy. Sir, he happens to be the chairman of Regional Chapter Coordination Committee. We are thankful to you for organizing a program on such an important event. What is knowledge? Knowledge is power. Knowledge embraces three things: creativity, righteousness, and courage. The word courage is very important in our life. One has to be courageous. So learning gives creativity. Creativity leads to thinking. Thinking provides knowledge. Knowledge makes you brave. There is a proverb that old order changes, yielding praise to new, and God fulfills themselves in many ways. We need to update ourselves. We need to be ahead of the changes. Now, information technology is the backbone today. We are passing through COVID, and COVID has taught us many. There are many negative things about COVID, but the positive things about COVID is that we are all assembling we are assembling in from different parts of the country. We are assembling together. Another thing, COVID has taught us how to be disciplined, and this demonetization has also taught us that we need to depend on information technology. So we today the world is changing fast. We need to know important techniques like data analytics, blockchain, cyber security, and these things, machine learning. Just as an engineer should know all these things, we need to be acquainted. So the today's topic is blockchain. I congratulate Dr. KG ABS and Murthy sir for organizing the program, and I would request you to go further. Thank you very much. I would not take much of your time. Thank you very much. I
Thank
wish
you,
the
sir.
program a grand success. Thank you.
Thank you, President, sir. Thank you very much. Thank you.
Thank you, sir. Thank you, sir. Now, may I request our honorable speaker, CMA Guru Prasad sir, to please continue at the event.
Good evening, warm welcome to all of you, and respected President sir, respected Vice President Raju Iyer sir, respected Murthy sir, Dalwadi sir, Sumita ma'am. I thank you for all the affection and the blessings as elder members of the profession. But I also thank all the participants who are going to be part of this presentation today. And I wish everybody an advance happy Teachers' Day. Tomorrow, our greatest president, Mr. Radhakrishna's birthday. In commemoration of that, we celebrate Teachers' Day. I take this opportunity. All our teachers, everyone who teaches, may not be formally from school or from college. Each one of us are gurus in our own way, who are elders to us, who teach us the good thing, the moral, and the right way of living. All those people, Swamijis, are all teachers for us, gurus for us. And pronouns to all the teachers who had made me to come up to this stage. I always talk to my teachers of my school, even though I am in touch with my teachers. Tomorrow I'm going to greet them again, and a happy occasion for them to be in touch again. And thank you so much for the opportunity given. I thank Murthy sir once again for all his encouragement, Dalwadi sir for all his inputs given to me. And now I will start the presentation without much of other things. Is the screen visible? Is it visible?
No, sir.
1 minute. Now?
Yes, sir.
Okay, thank you so much.
Yes, sir.
Dear participants, on June 21st, we had the first session on blockchain demystified. We had a detailed discussion on what is blockchain and how it works and its impact on the profession to some extent. Now, we are going to discuss further in depth. We are going to dive deep. Before that, I want to have a small recap of what we have learned in the first session, followed by applications, especially on accounting standards, cost accounting, and basically on the taxation aspect of the cryptocurrencies, which is going to make a big way down the line, and how the government is going to impact and how the taxation is going to impact such type of digital currencies. Now, the agenda for the day is we have to have a quick recap on blockchain technology. What are the advantages of blockchain technology and the applications of blockchain technology? And finally, we are going to deal in length on cryptocurrency accounting and its taxation. Now, the quick recap. As we all know, blockchain is a technology that permits transaction to be gathered into blocks. That way, every record is termed as a block. It is recorded cryptographically. That means it is encrypted as blocks in chronological order. That is one after the other. It is linked like a chain. And you get the output is the ledger, which is accessed by the different server. This is a simple definition of blockchain, which we saw. What is block? It stores information and about transaction, like what is the date, what is the time and value. So with that, we can trace who has done this transaction, why it has been done, and when it has been done. So it is very important to ensure the traceability of the transaction itself. So audit trail is helpful when we have the date, time, and value. This is the importance of the beauty of the blockchain. What it does, it stores information about who is participating, who are the participants in the who is the maker, who is the checker, and who is the authorizer, is what can be looked at in the blockchain. Without identifying information, you don't give all the details, but you give an unique signature called as digital signature is appended to the block to ensure that this is an authenticated transaction. This is a simple definition of a blockchain. And we also know that it is a real time, you can track it, highly secure, there's no single point of failure, and it's very transparent, especially for the auditors and the senior accountants, cost accountants. Transparency is very important. And it also reduces cost because it reduces the intermediary being there. No need for an intermediary. And all the transactions goes through the blockchain is trusted. That means any person, if he feels that it is from blockchain platform, he feels little what you call it as happy, or he feels that little bit of confidence is there in him. Yes, this transaction is immutable, unchanged one. So I can trust this, whatever the transaction is there, it has not been altered. And basically there is no third party involvement because there is no intermediary, as I said earlier. Because normally in the regular transaction without blockchain technology, there is a third party, either a bank or some service provider involved between two parties. So that is obviated or removed or eliminated in the blockchain technology. That is one of the beauty, which also reduces the cost of operations or cost of processing the transaction. So with this, we move to the next important topic. That is, it is always a decentralized one. That means all the information is not stored in one single place. It is not centralized. The data is not centralized. The information is not centralized, but it is spread across different computers so that one person cannot hack or just penetrate into that system and then try to take out the data. So data stealing or data fiddling cannot happen. It's a data secure environment. So stealing of information which has been stored in single device is now impossible for a hacker, because it is spread across the information is spread across different computers. So if we had to have the information in total, he has to hack all the computers, which is next to impossible. So it is a distributed ledger. That means it is spread across different computers, and immutable. That means undeniable. When somebody has passed a transaction in the database, he cannot deny the transaction on a later date. And the data is transferred securely with the help of cryptography. And it is a way of recording all the information to different devices. Basically, because of the internet facility, as we were discussing in one of the forums, we saw that internet is the mother of all the invention nowadays, of all the data processing technology. Internet is the mother. It provides and protects, and it enables us to digitally get connected. As we are discussing today from different parts of the country, in different parts of the globe, we are having webinar. But for the internet, it would have been very difficult for each one of us to physically come to one particular place. Now it is also decentralized. We can even say the webinar is now, instead of being centralized in one place, one particular area, we are also decentralized. That is, the data is, that is the information, or what do you call it as, the webinar information is decentralized. It is also similar to a blockchain, we can say in simple words. It is all about fairness and security. That means once the data is in blockchain, we feel that the data will not be corrupted or data will not be altered. So you feel that the data will be fair and true. And it is also secure from being hacked or stolen by someone else. Now, as we quickly go through, it is a big database which helps you to record all the information safely. That is very important. And you can trust without need for any intermediary. There are different types of blockchain, like private, public, and permission blockchains. And we saw that in the previous our webinar. And you can, not only money can be recorded, even the identity of the people, for example, voters ID or other type of information, or any other information relating to an individual, can be stored securely in the blockchain. Even music and agreements can be stored, because basically the smart contract is one of the latest thing that is going to be as an outcome of the blockchain technology, wherein a person need not worry about whether his transaction will be altered or agreement will be altered by someone else without his knowledge or without his consent. So here the agreement will be kept in a smart contract, and automatically when the smart contract is executed, the payment will go to the person. For example, if a music director had to upload his music, latest music in his blockchain technology, what will happen is, if anybody downloads that particular music which has come, the payment will be made cryptographically through a digital currency. It could be Bitcoin or anything else, or Dogecoin, whatever we can say, or Ethereum. So the payment will automatically get transferred to the concerned musician. So he will be happy that the moment he gets the money, he will be happy. Similar to what we get SMS alert when we transfer, when we buy money, when we withdraw money from the ATM. Here also, when somebody is using his music, whatever the album or whatever, so once he downloads that music, he is sure that no one else can counterfeit it or use it. So it's cryptographically encrypted, so he cannot replicate it. That's the beauty of the blockchain technology. Any information that is added to a blockchain is packed into blocks, as I said earlier. And when all the blocks are linked together, we call it as a blockchain. Now, centralized means one node does everything, and decentralized means it gets distributed to different subnodes. For example, device, I mean here, it could be your own phone, smartphones or laptops, which is the point of contact for the transfer of information from one person to another, or transfer of wealth or money from one person to another. It is distributed, and only those persons who have the, what do you call it, the eligibility or the authority to connect get connected. For example, today we are in webinar. Only for those people, for those members and students of our institute are having the eligibility to get enrolled to the webinar, and then they'll be given the access. That means here it is distributed. This is also a blockchain technology. It's not need not be a rocket science. I can even say the webinar, the information which is being spread across India and spread across the globe, is also a distributed webinar, wherein only for those people who have been given the access right to the link, we can enter into this webinar and listen to the webinar. Not every third person or a stranger can enter into the network. This is a beauty of the simple beauty of the blockchain technology. So this is a small presentation which I have made in the last presentation on June 21st. So in the distributed technology, different CPUs, that is central processing units, are connected to the network, and one single CPU controls everything. Even we have gone through that in our own way when we book tickets for air or train. There are different terminals are used, and at the comfort of a home, we can book ticket from anywhere in India or anywhere, any part of the globe. So transactions are pseudo-anonymous. That means virtual secret. It's not fully secret, or it is a secret, the digital secret. We can say it's a digital secret. And all the group transactions are grouped in the block. Each transaction is logged and stamped. That means each transaction, I said earlier, there is a trail, audit trail is left, and we can know who has used their information, who has logged, and what has happened and what time it has been done. So every individual who is part of the system is tracked. So tracking is traceability, tracking, everything is there in the blockchain. That is a very beauty thing, where as auditors, as cost auditors, as management CFOs or CEOs of the many of the companies where our members are working, this gives some sort of a comfort and confident level when we say that they can easily look up who has done that quickly, and if they are happy or satisfied with the credentiality, that is more of a credential checking. When you are happy with the credentiality, you will approve that. Otherwise, you will block it. You will not allow the transaction to proceed further. So that is the beauty of the chronological ledger. It is not centralized. It doesn't have one owner. Nobody can say, I own blockchain. It's not possible, next to impossible. So many owners are there, co-owners are there, and therefore there is very strict rules are in place. So how to each one can approve, how we can upload the transaction in the blockchain. So this is a small example I've just given, how it moves from one person to another, how it gets approved at different levels. And already here someone has approved it. So what happens here, that particular transaction already approved. So one need not approve once again, it gets added to the block. So this is the beauty. So where it all comes from, someone should be the driver behind this. So miners are the drivers for the blockchain. Individuals who maintain and update the blockchain are called miners. We call drivers. Here they call it as a miners. The miners process the transaction by sending transaction to other nodes to be verified. That means each person cross-checks whether all the appropriate checks are in place, whether appropriate transaction has been entered. All these things are the role and responsibility of the miner. When all the miners agree, so that means there are not one person who can override the entire transaction. It is a part of a very good internal control. If you have to eliminate the fraud, what happens generally is one person overrides the entire transaction. So when one person overrides the entire transaction, there is a scope for fraud. For here, it's next to impossible, because each miner who is part of the group will have to agree, and then only the transaction gets completed and added to your database. That means we adding to the chain means adding to the database, and it is visible to everyone within the network. That is, we can know whether the particular transaction has been approved by the miner, other person or not, the approver or not. If not, then you have to request him to approve the transaction. So we are saying that it is tamper proof. How do we prove that? I'm giving a small example of that. For example, as I said earlier, blockchain is always backed up by a hash technology, wherein it's very difficult to decipher it, encrypt it with your naked eye. That means you cannot physically do it, and it has to be done only through the system or the machine which has given that particular rights for you. Here, what has happened is a particular person has typed the input, this is a test, and he has used a capital letter when he has typed in the first time. So when somebody by somebody, even he tries to test whether the blockchain is foolproof or tamper proof or not. What he does, immediately he replaces the capital letter of T with a small letter t, and you see what happens. Presto, the complete hash has changed. So earlier the hash started with alpha numbers, that is alphabet C. When he changed it into small caps, small letter, then it automatically the hash changed. Now we can easily, by visual inspection, you can see that since the hash has changed, the chain has broken. That means we call it as breaking of the blockchain. That means the record will not get updated, it gets stopped there. It's like a traffic jam. That is, it gets stopped abruptly, it doesn't move forward. As one of the beauty of the blockchain, it is always moving forward, it doesn't go back. That is, once a transaction has been done and it is automated, it gets moving forward, it doesn't move backward. That means you cannot backdate a transaction. When you backdate a transaction, the hash of that particular transaction also gets changed to all the members will be able to see that. Suppose if we are part of this blockchain group, assuming we are the miners, and immediately we will see that this particular transaction has been tampered, then once the hash gives the proof or the clue that your record has been shifted or changed or altered, then you can stop approving the transaction. This is the one of the significant advantage for all the people, all the finance and accounting professionals, audit professionals, that you can, at the visual impression itself, you not waste time whether the data has been appropriately validated, whether I have changed it or not, or whether the management has done something or somebody has done some mischief. You can easily find out. This is the advantage of the blockchain, especially for the professionals. As I said earlier, there is a lot of time savings, and because there is no intermediary, you may not have much of persons to do. Division of labor is not required, because it's all division of labor is fixed digitally, and a lot of cost savings are there. And it's very secure technology, and traceability is one of the basic thing. As today we had a very good discussion in the evening, that your vaccination, when we do now, that it's also digitally blockchain technology is using, so nobody can counterfeit that. Even though you are not vaccinated, you cannot self-proclaim that you are vaccinated, because they can trace back to where and when, at what time you had got vaccinated, which is the health center you got vaccinated, on the date. So a lot of traceability is there. So speed, quality, and cost, these are our fundamental thing as a cost accountants. We look for the speed of the transaction being completed. Quality and cost is always our bread and butter. We see that not only you produce an item or render a service at low cost, but also at good quality. What is the fun in producing an item at low cost but low quality? We are not accepting it as cost accountants, as cost and management accountants. We always look at efficiency is our mantra. So here your blockchain will help you out to efficiently render complete the transactions. Traceability and flexibility is always there. So this is the advantage of the blockchain technology. Now, where and all we can apply it, we have seen in the last time that the healthcare industry, where they can track who is using the COVID vaccine, whether when it has got vaccinated, when, what time, what type of, whether it's Covaxin or Covishield or Moderna, whatever the vaccine which is that. And they also, a lot of counterfeit diamonds, gemstones are all spread across different jewelry, this one. So you can also trace from which diamond mine that mine has been done. So this is also important, because we see that in in some of the African countries, there is low level of human rights being enforced. So a lot of abuse of human rights. So some countries don't like human being abused. So in that case, they want to trace such type of countries, diamonds or the gems or precious stones are not being utilized for sale, and it's not brought to the main market, because what happens, you are funding indirectly such type of abusers of the human rights or terrorists who may be staying there in such type of countries. So traceability is one of the beautiful thing of the blockchain, and Everledger is one of the technology that is being used. Similarly, when we see that Walmart has been using to trace the food in 5 minutes, they can trace from which part of the field or the agriculture land that origin of food had come, though it is moved from the field to the different parts of logistic arrangement, it reaches the Walmart shelf, but you can trace back what was taking 4 5 days to trace back. If there is a contamination of some food item, you can trace back much faster with the help of the blockchain. As I said earlier, smart contracts, Fuzzy is one of the system where AXA France was using. Until recently, what happened was, if there is a delay in the flight, you'll be getting a compensation as an insurance compensation for the delayed flight taking off. That means if there's a delay in the flight departure, you'll be compensated by an insurance by AXA France. But because of the COVID and other restrictions, they had to abandon it because a lot of countries, as you all know, have put embargo on traveling between countries. So during the blockchain, what do you call it, as during the COVID period, this product has been temporarily put on hold, as I read in the newspaper by AXA France. But once everything comes to normal, these type of contracts may come into play. That means if a person is delayed by say 2 hours beyond his time, the moment he boards the flight, he will get a credit for the insurance. No, that compensation will be credited to his bank account. That's the beauty of the blockchain. He need not send a what do you call it as an application, then get it processed, and then he need not get the money back. So it's a different ball game. So we are in a very very fascinating world. So music industry, as I said earlier, somebody downloads the music, you'll have to pay it through the either cryptocurrency or through normal digital payment channels like NFT or whatever. Similarly, yoga coin we discussed when we had the first program on the yoga day. For the yoga class, yoga coin is one of the means by which you can make the payment for attending the yoga class. Similarly, we had a very excellent what do you call it as a news saying that letters of credit, which is being used for the borrowing for imports and other your payment to your vendors, top banks like SBI, HDFC, ICICI Bank, and 10 other banks are going to use blockchain for by forming a new company called as Indian Banks Blockchain Infrastructure Company Private Limited, IBBIC, Indian Banks Blockchain Infrastructure Company Private Limited. So what happens here is we all saw the pain point of the Punjab National Bank being defrauded, and a lot of things are in the limelight, which I don't want to repeat at the cost of the fraud that has happened. What happened, the repercussions of the fraudulent credit being availed. So all these things will come to a knot if these type of technologies used. Not only you can ensure that it's secure, but also it's free from frauds and errors in the application. Now, our own bread and butter is cost accounting records. As the members in industry who are being given the rights and who are being given the responsibility to maintain the cost accounting records, and as cost auditors who have to validate the cost accounting records, it is very important that we all come together and join our hands with the institute. A lot of members are there. Today is only an eye opener for all of us. So there could be other eminent members who can join hands with the institute to bring an awareness of the how we can use the blockchain in our cost accounting records. Because time and again, as I was discussing with the past president G.N. Venkatraman sir in Bangalore, he was saying that many companies are reluctant to employ cost accounting records because they feel that the data is not secure. They feel that someone can steal the data and pass it on to the competitors. So that is the conventional accounting where we have centralized ledger. Whereas here in the blockchain, we are going to have a distributed ledger. That means ledger is only a word, but it is a record, distributed record technology. Rather, ledger is our bread and butter for the accountants, be it cost and management accountants or financial or statutory accountants or chartered accountants. So here, what we see is ledger is only a word. It's not. It should not mean that it's like a ledger what we all understand. It is a distributed record technology. Rather, it's a distributed ledger technology. When record keeping of cost accounting is done through a time stamped or fault tolerant ledger, that means you will not tolerate any fault or error in the ledger. That means the data should be free from error as well as free from fraud. If that is there, half of the battle is won, both for the person who is keeping the record and also for the management and as well as for the cost auditor. It is technically possible and economically infeasible. That means though you can technically modify a record, but it takes a lot of time to modify a record which is already altered or added to the blockchain. What I mean by that is, suppose you have passed a one journal entry and there is an error. Instead of saying 10 lakhs, by mistake you have typed as 1 lakh. You have to keep that 1 lakh as it is. You cannot go back and edit the transaction once it has been approved. That means the audit trail will still stay there, but you can amend that entry by one more blockchain entry to nullify that or give actual effect to the transaction. So modification is next to impossible because there is a timestamp is involved. As I showed in the previous slide, the hash gets changed the moment the transaction is altered. That means somebody is keeping track. You are digitally kept track by the computer itself, by the system itself, by the blockchain technology itself. When I change the capital letter to a small letter, the moment I do that, the hash changed. The complete it gave out. It gave an evidence that someone has made some mischief. So that is the advantage wherein I cannot approve it. I have to, the moment I have to upload it, I have to digitally sign it. That means I will be got caught. That is, so and so has only done it at this point of time, at this point of hour. So that is the advantage of maintaining the cost accounting records in the blockchain technology. And the beauty of one more thing I would like to add here is we have generally accepted cost accounting principles. Our institute has taken a lot of pain, a lot of efforts by our cost accounting standards bureau, that board, that all the accounting principles, cost accounting principles should be codified. And in the conceptual framework, I can see that the transparency and auditability, that is very important aspect that has been driven home by the generally accepted cost accounting principles, wherein cost information is used not only by the stakeholders like shareholders, but also by the management, regulators, and government. So that because a lot of subsidies and other things are involved, so the government also wants to ensure that the cost accounting records are tamper proof and it is free from errors and frauds. There is need for transparency with regard to the definitions and source of data. So there should be a transparency with regard to the source of data, which from which source this record has been maintained. So it should be possible for those who wish to review the cost information. Like for example, our cost auditors will have an audit trail with respect to how this transaction has been entered into the books of account. So auditability is one of the basic information which we can get from the blockchain technology. Auditability to the cost information is a prerequisite to ensure that we use effectively the cost accounting record. So it's a very, very exciting and very important era we are all stepping into, especially for the youngsters, young CMAs. They have to now come out of the shell of getting protected or always thinking that the other side is green. I don't want to go further into that. You always think that the other professional is doing well. Why not? We can also do add value to ourselves, add value to the profession, add value to the management by taking a lot of initiatives from our side to ensure that the costing records, the cost accounting records like material, labor, overheads, are all can be maintained with the help of the blockchain technology. All the records can be maintained. The database can be maintained using the blockchain technology. Even the HR, you can advise the HR to keep all the data with respect to the employee's cost, be it direct employee cost or indirect employee cost, under the blockchain technology so that we can validate it and ensure that no one else can alter. Even your HR team cannot make any wrong changes or they cannot make any unauthorized changes in the data of the employee records. This is very important. So what happens is once we do that, we get a lot of comfort level. The cost auditor will spend less time in, he will have a peace of mind when he completes the audit work, cost audit. He will have a peace of mind that yes, I have done something because I did not spend time on ensuring the other than ensuring that basic checks and balance have been done. So when that is done, he can start looking at how the value addition can be given in the cost audit report, where the efficiency level has gone down in the company's production or in the rendering of service. So such type of value added service can come in when the cost accounting records are used with the help of the blockchain technology. Instead of centralizing everything, we are decentralizing it so that every transaction is cross-checked by the appropriate person, and so you have a, what do you call it, as a comfort level, a confidence level that the transactions are genuine. It is not being altered even after signing of the cost audit report. It is safely secured and it has been archived properly. That's the advantage. So the majority of the people cannot come to collude unless such thing happen. It's very difficult. Always there is a room for fraud, because I don't say that the moment the blockchain is not a magic, because whenever there is a human element is involved, technology can only enable you or support you, but it cannot be a foolproof arrangement. But 99.9% we can say that there is next to impossible to alter the technology, alter the records, because every miner will have to agree your changes. Otherwise, it cannot proceed further. The chain will get broken and the record will not get updated. What I mean by chain is broken means the record will not get updated. It will stand as it is. Whatever the transaction that has been completed up to the time before he is tampered, that record will remain as it is. Any further addition or deletion will not go through. Now, coming to the second part of the important point which we have discussed today is the cryptocurrency. It is a most buzzword. We are all discussing on the digital currency. India is going to come with its own currency. China has already come with yuan, digital yuan currency. So it is designed to work as a medium of exchange. Normally, we used to have only the fiat currency or the paper currency or coins of the respective countries used as a medium of exchange. Earlier, we had a barter system. I don't want to go deep into it, but money is used as a medium of exchange for the transactions. Here, a cryptocurrency is a digital or virtual currency that is secured by cryptography, which we discussed last time, which makes it nearly impossible to counterfeit. I cannot counterfeit a currency, cryptocurrency, but I can counterfeit a currency which is printed by the sovereign government. So, in fact, maybe 15 years back, Middle East countries have banned color Xerox because there was one case wherein these people, the counterfeiters, even took a color Xerox machine and then they counterfeited the currency of the respective countries, Gulf countries, and they passed it down as a genuine currency in the market. Later on, when the officials came to know that some amount of currencies have been counterfeited and it has been in circulation, then they banned the Xerox machine, that is, photocopying machine. I should not use the word Xerox, sorry. Photocopying machines, color photocopying machines have been used by the fraudsters to pass on the fake currency as a genuine currency. So that advantage of not being able to reproduce or make a virtual currency, duplicate virtual currency is impossible. So counterfeiting is impossible in the cryptocurrency at this moment. At this moment, I won't say that they are actually the fraudsters are always ahead of us. So at this moment of time, we are not found that there is no news saying that someone has created a fake digital currency. Okay, anyway, that is part of the academic interest. Now, Bitcoin is the big Anna, that is the big brother of the original cryptocurrency. The underlying technology for the Bitcoin or the cryptocurrency is the blockchain. So, the popularity of the blockchain technology has gone up only because of the Bitcoin. It's not that everybody knew about the blockchain technology. Once they started using the Bitcoin, then they came to know about what is the platform that is being used to produce the Bitcoin. So this is called as a Bitcoin is considered as the original cryptocurrency. It was created in 2009 as an open source platform, and using the Bitcoin blockchain technology, it allows the users to make transparent peer-to-peer transactions. Suppose I want to transfer my membership fees to the institute, I need not go through the process of sending it through the bank. I need not open a ledger or account with the bank. Rather, I can transfer my amount from my crypto wallet, say one Bitcoin. I can transfer to the our ICAI, that is Institute of Cost Accountants of India. I can transfer from my wallet or the crypto wallet to the institute's crypto wallet. That means I need not go through the process of the bank. Bank is now removed. I need not make online with the help of the bank. What normally we do, we use the user ID, password, enter into the gateway of the institute, and then it will take us to the gateway of the bank. There you have to again put your user ID, password of your bank credentials, and then you have to make the authorization for the payment. Now that is completely eliminated. Instead, I can transfer directly the money from my bank balance, that is the crypto balance, the currency, one coin or whatever, to directly to the institute. Similarly, I can transfer to anyone I want. If I want to give a gift to another person, he should also have a crypto wallet so that I can transfer directly from one person to another. In fact, we use Google Pay and other things. This is also similar to that, wherein no need for the bank intervention. It's very, very fascinating world. See, when we discussed last time, I told that one Bitcoin is equal to 26.2 lakhs. That is 26 lakhs, 20,000 in June 21st. Now today we are on 4th of September. You see, yesterday I just was curious to find out what is the value of Bitcoin. It has gone as high as 37 lakhs. Imagine the demand for the Bitcoin. So it's a very, very fascinating world. Similarly, for other currencies also, we see that there is a lot of changes. Similarly, as a other type of coin, you not always depend on one type of currency, cryptocurrency. It's also there are currencies like Ethereum, which is 1.61 lakhs when we discussed last time. It has gone as high as 2.990 lakhs, nearly 3 lakhs. It has gone up. So Litecoin is one more currency alternative to Bitcoin. It is also completely decentralized, but only thing here is only 84 million Litecoins are there. It is believed that only 84 million coins are there, and it is much faster. It involves less power consumption. One disadvantage of blockchain as of now is it guzzles a lot of power. That means a lot of money is when you mine the currency, you have to use a lot of computing power. When you use a lot of computing power, you have to use advanced computers. When you use advanced computers, you will consume a lot of power energy. In fact, a month back, I read an article in the paper that China has banned the lot of miners are using or mining the cryptocurrency left, right, center. So it has immediately told the electric supply company to cut off the power supply to such guzzlers of power. That means it says that they don't. I don't want these people to consume a lot of energy for mining the bitcoins or the whatever the cryptocurrencies. So they have also want to develop their own currency, that yuan as their currency. So that is the advantage they want to develop. So they want to digitally use their own currency. And the Reserve Bank of India and the Government of India is also looking at the how to digitize our own currency through the say India rupee, digital rupee, something like that, so that it will be of help to digitally transaction can be made with our own authorized by the Government of India. So we are in a very, very fascinating period. So one Litecoin was just 11,000 rupees. It has gone up to 15,000 rupees. So we see from here a lot of transactions are happening. Suddenly, a transaction, a value cannot go up unless there is a demand, unless there is a shortage of supply. So here, when the money is involved, there are two things. One is accounting, and accounting is followed by taxation. So accounting and taxation go together. And we have one more third dimension, fraud. I always say that we used to say that always there is a certainty, one is death and another is tax. Here now we have to have four different type. When there is a currency, there is a, what we call it as, we can say there is a taxation, and as well as accounting had to be done. So this is a very exciting world. All the young members of the profession, I would kindly request you to kindly update yourselves, to go through a lot of magazines and be keep your eyes and ears open. Down the line, young directors, who are the successors of the present companies, are going to be at the helm of the affairs. So when those directors are going to use left, right, center the digital currencies and digital technology, we professionals, we also have to gear up and advise them which is the best one, which is the right one. So we are here to add value. So we are going to build a nation with added value. So we are going to, as cost and management accountants, we are going to play a major role. Please keep this in mind. That's the reason why we are having such type of webinars. Thanks to our institute for bringing out a lot of things like this. We'll have down the line. We'll have also people from other experts from other IT domain can talk to us, can guide on the digital technologies like robot process automation, machine learning, artificial intelligence. This is not going to go away. I have been saying that now we have to learn ABCD again. A for artificial intelligence, B for blockchain, and C for cyber security, D for you can say data analytics. These are going to be the new game we have to follow. Now, how to account it? Is it government keeping quiet? No. Government is also proactive. They're also looking left, right, center, what's happening. They're not. It's no more a different. It's no more a government of the earlier era. The government is also not only in India, across the globe. They are keeping a watch on all of us. So, Ministry of Corporate Affairs on 24th of March, by the General Statutory Rules (GSR), they say that they have made an extraordinary gazette. In that it say, in excess of the powers conferred by subsection 1 of section 467 of the Companies Act 2013, the central government hereby makes the following further amendment. That is, Schedule 3 has been amended now with effect from 1st April 2021. So, when we see the balance sheet of 30th March 2022, all the companies will have to disclose present if they are having any details of cryptocurrency or virtual currency on hand. So, this is very important. Government wants to track this, especially for the companies. For the time being, we have to see what for other non-corporates, what type of the specification they're going to bring. Probably they may amend the IT forms, ITR forms, IT return forms, wherein they may ask you to even disclose such type of cryptocurrency, if any, held by the individuals as well. So let us see. We will keep our fingers crossed. At the moment, when the company has traded or invested in cryptocurrency or any virtual currency during the financial year means between 1st April 2021 to 30th March 2022, you have to suppose disclose the following. Then you may ask what happened to April 2022, 19 to March 2020. Maybe you may have to give previous year also you have to give. Then you have to also, if you have traded during the previous year, that also we have to capture it. That data we need to keep and disclose not only in the balance sheet but also to the auditors, and they will have to validate it. The statutory auditors, the company will have to validate this information. So it's very important. We all have to keep our eyes and ears open. The profit or loss on transactions involving cryptocurrency or virtual currency will have to be disclosed. What is virtual currency? It is a type of unregulated digital currency. That means right now it is not regulated by any government or sovereign nations. So it is unregulated, it's open platform. It is not issued by a central bank. So Reserve Bank of India has said to issue any Bitcoin or Litecoin, or any other country in the world has not, a bank in the world has not issued the Bitcoin or Litecoin, whatever it may be. So cryptography based currency is called as a virtual currency. And you are supposed to disclose what is the amount of cryptocurrency you are holding in the bank, in your crypto wallet rather, at the reporting date as of 31st March. What is the value of the currency you are holding? And if you have made any profit or loss in the transaction, exchange of in the trading of the cryptocurrency, then that also have to be disclosed. Or if you have deposit or advance have been given by some other person, suppose you are a issuer of cryptocurrency, then you are supposed to inform that in the balance sheet what is the value and how much who has invested that. All this information will be captured on the balance sheet itself. That means this record or this balance sheet will also be filed with the income tax authorities and other appropriate officials of the government of India. It could be Reserve Bank as well. When you have involving in any related to FEMA approvals, sometimes they may ask you to produce the balance sheet. So in that case, this is captured in your balance sheet. It is captured in your books itself. So there is no hiding behind something. So you cannot hide it. You have to show it. Now you have to be more transparent if there is any cryptocurrency transaction have been involved in your company or in the organization which you are doing the audit. Now, where is the standard for me? How do I account it? How do I? So as of now, India and IFRS yet to come with any new standard. We'll keep our eyes and ears open. We'll keep it fingers crossed. But there is one basic thing that has come is European Financial Advisory Group, part of IFRS. They have issued a discussion paper on accounting for crypto asset or liabilities on June 2020. As when we are all struggling or when we are working from home, the world was not keeping quiet. IFRS, the advisory group was not keeping quiet. They thought it fit that we should try to bring some uniformity in accounting aspects. And the last day for the comment was on July 31st. Incidentally, July 21st we had the program. June 21st we had the program, and we had 1 month time, July 31st, to go through that. And for the benefit of our members, I'm just giving the basic thing on this. What basically they see that I'm just giving a crux of the whole accounting standard. What this is, if the company is using as a holder, the consideration of holder, if it is for a business purpose, what is the purpose of the business it is holding, that has to be disclosed, and what are the underlying economic characteristics behind that. This is the important point which you have to bear in mind. Similarly, when you're holding the crypto asset, the classification should be determined based on the function. For what purpose you are using it, what is the nature of that. And the classification by function is basically the approach followed by the IFRS Interpretation Committee, IC agenda decision on cryptocurrencies. And most of the time, all the national setters, standard setters like many institutes across the globe, they are following only the function. What is the nature of the function? What is the nature of the classification? So this is the basic thing that has to be kept in mind. Except Japan, it is a different. Japanese gap is different, wherein they are considering the cryptocurrency as a unique asset type, but other countries are yet to come up with any standard. Let us keep our fingers crossed on that. Similarly, the issuer of the currency should account it. If there is an obligation, what is the nature of the obligation has to be disclosed. If there is a need to consider whether the IFRS is sufficient to capture this obligation that can arise from the issuance of crypto asset. So you need to see whether it is IFRS need to be amended or has to be kept as it is. So there are three choices now. Whether to amend the IFRS standard as it is, a new standard has to be brought in. That is option number 3, the last option. Or amend it if required. That is, you just tweak the existing IFRS standard, or keep it as it is, status quo. That is, you don't make any amendment. So this is the 3 possible options that have been given. Please kindly go through this European Financial Advisory Group so that you'll get further clarification on that. Basically, they want to see that you'll have to give the reason for why you're holding a currency. Is it for trading purpose or is it for investment purpose? What is the reason behind holding this currency? That is the basic advantage of that. Now coming to our own Indian laws, because we have to, whenever there is accounting, whenever there is income, there is always somebody behind us. That is nothing but our big brother, the taxation.
Sir, Mr. You are not changing the screen, sir?
I'm sharing, sir.
No, it is not. To me, it is not visible. I don't know.
That's what I checked with madam. She told it's visible.
Madam.
Hello, sir.
Yeah.
It is visible, but you have not gone through the window which you are looking. So what happens? You are also seen, and you are changing your
slides.
Screen.
So right now it has been changed.
I'm sorry.
Is it okay, sir, now?
Yes, sir.
Okay. Then I'll share the presentation to all the participants,
Okay.
and basically can go through that. That's not an issue.
Sure, sure.
So this only deliberation of the talk of what we are going to go through in the next few months or few years. What and all is going to impact us basically. We have to look to section 2, subsection 7 of the Sale of Goods Act. It says that goods means every kind of movable property other than actionable claims and money. So here I stop here. It is not money. So good is not money. So here Sale of Goods Act doesn't apply because straight away the definition has given an exception to that. It is not goods. So it will not get impacted by the cryptocurrency will not get impacted by the Sale of Goods Act. Coming to the CGST, Central Goods and Service Tax Act 2017, if we consider cryptocurrency as a money, it would get exempted because section 2, subsection 52 of that very clearly says that any transaction purely for money purpose, exchange of money, doesn't get attracted by GST. So GST doesn't apply for the funding between one party to another party. If you treat the cryptocurrency as a goods or property, possibly then the supply of bitcoins will become a taxable supply under the GST as well. Now I went back, thanks to Murthy sir, and I went back and saw what other countries in the world are doing with respect to taxation under the GST itself. European Court of Justice, Skatverk, one case happened. Skatverket versus David Hedquist was decided on 22nd October 2015. As early as 2015, 6 years back, they held that transaction to exchange a traditional currency for the Bitcoin or vice versa were entitled to exemption. That means they're saying similar to our Sale of Goods Act, similar to our Central Goods and Service Tax Act, they also, European Court also says that it is exempt from paying from VAT as they fell into the category of transaction involving currency and banknote. Just as currency and banknote doesn't attract, exchange of currency and banknote doesn't attract your VAT, similar to that, the cryptocurrency will not get attracted by VAT. We have to see this case law is old case law, but still this is relevant. It is existing as of now, and it has not been overturned. It's a very important case wherein even in Europe, they say that cryptocurrency will not get impacted by the indirect taxes. So here we have got some sort of a case law itself to decide on that cryptocurrency is not taxable under the VAT system under the European Act. So coming to our own taxability with respect to the CBDT. Now this is our biggest big brother. So it is yet to come out with any notification as on date or amendment regarding the cryptocurrency tax treatment. However, let us see what and all the possibilities are there. How, as we are, as well as finance professionals and cost accounting professionals, we also know how the taxation has been evolved, especially indirect taxation and the direct taxation as well. We are also good at direct taxation. As we all know, it could be taxed either as a capital gain. Suppose if we treat it as an investment, just like any other property like land, building, if you treat it as an asset, then it will be treated as any income that arises or loss that arises could be either capital gains or capital loss, gain loss. So it could be again long-term capital gain or long-term capital loss. So we have to go back to Honorable Calcutta High Court. In the case of Commission of Income Tax versus All India Tea and Trading Company Limited, one of the very landmark case, it observed that when the asset is held under Section 2, Subsection 4A of the 1922 Act include physical, actual, constructive and also symbolic possession of any property of any kind, it get attracted. Similarly, since cryptocurrency is held on a wallet provided by an exchange, it is symbolic. You need not physically hold it. It is symbolic delivery, or symbolically you are holding it, or constructively you are disclosing that, you're implied that you are having the possession of the cryptocurrency. So if the government looks back to the Calcutta High Court judgment, then they can say that it need not be physically, you not have the cryptocurrency in your pocket or in a normal wallet, but even if you hold, you when you declare that you are having a cryptocurrency coins or whatever the cryptocurrency by Bitcoin, whatever, then you are automatically disclosing that you are having some property. So Honorable Supreme Court also in the path-breaking judgment in the case of Internet and Mobile Association of India, which is a hard-burning case, wherein the RBI held that some of the attributes of virtual currencies are amenable or changeable to the jurisdiction of the RBI. That means This is a path-breaking judgment we just had. Earlier, the government said that whoever is having cryptocurrencies banned or doing some illegal activity, the Supreme Court overturned the what do you call it as the idea or the thought of the government saying that no, you cannot say that. We have to live with the new world. You have to embrace the technology. You cannot say that if somebody is having cryptocurrency in terms of blockchain, in terms of Bitcoin or Ethereum, whatever. So you cannot say that you cannot hold it. It is not a crime per se, as long as it is not used for illegal activity or darknet operations like buying for drugs or buying some arms or funding the terrorist activity. As long as those things are not there, you can allow the normal transaction to also happen through the virtual currency. Now we all say that Income Tax Act, this is always a currency has store of value. It has alternate view is that if it is treated as an investment, suppose we say that cryptocurrency is an investment in the books of account, it may be taxed either under the capital gains as long term if we hold for more than 24 months.
Excuse me, sir.
Yeah.
Sir, speaker, sir, could you please change the slides because I am not been able. That is why. Would you please change the slides because slides are not moving.
Now it's okay.
One slide we are the sale of goods act. In the single slide it has been stopped.
Okay.
So for proceeding further, yes, sir.
How do I do that? Once again, I'll stop sharing. I'll restart it. Okay. Sorry for the interruption. Is it visible?
Visible, sir. Visible, sir.
Yes, sir.
Okay.
Visible, sir.
Thank you.
But
So
slides will move, na further.
yeah. It will move. Hopefully, it will move. I don't think so.
Yes, yes, sir.
Sorry for the interruption. So as we saw that on the one hand we have indirect tax. Now the big brother is income tax. We always see that currency is a store of value. So when the investment is held for long term for more than 24 months, it may get attracted by a long term capital gain. So we have to be ready for paying a long term capital gain. And if it is held for less than 24 months, short term capital gain. Why that advantage of long term and short term capital gain is, if it is a long term capital gain, when there is a loss, you can set off only against the long term capital gain. You cannot set off against a short term capital gain. Similarly, but in case of short term capital gain, short term capital loss, you can set off not only against the long term capital gain and also on the short term capital gain. So it's a two-way process, but long term capital loss can be set off only against long term capital gain, and any unset off or which has not been set off can be carried forward for the next 8 years. That is the act which says that if it is a store of value, you have to treat it as a long term capital gain. Now, assuming that I don't treat it as a capital asset at all, because I have to refer to section 2 subsection 14, which says that any gain arising on dealing with cryptocurrency should be taxed under the head income from other source. Suppose if it is not treated as a capital asset, I cannot keep quiet. So then I have to offer this income which I earn from the cryptocurrency as income from other source, because it's a wider definition. Income tax is 2 subsection 14 is a inclusive definition. It is not an exclusive definition. It is not a specific definition. Anything which falls under the umbrella of income, meaning of the income, then it will be taxed. So if I am not taxing under the capital gains, definitely I have to show it as income from other source in my income tax return under section 56. If cryptocurrency are lent, suppose you are lending to a crypto exchange, and if the recipient earns income from that exchange, such income may be taxed under head income from other source. Suppose you feel that I don't want money now. It's like you don't keep your money idle, right? You have to keep some, you earn some interest. Similarly, if you feel that cryptocurrency has no usage immediately for you, there is a possibility of you lending that to the crypto exchanges, wherein the recipient, that is when you lend it, you'll get some income from out of that. So how do you tax that? So again, our big brother will tax it as income from other source. So it will not be taxed as income from long-term capital gain or short-term capital gain. When I have transferred it for a temporary purpose, I have not transferred it for permanent. So it will be treated as income from other source. So what happens here is, if it is asset, it is long term. If it is not an asset, it is treated as income from other source. Either way, you will not get escaping from the clutches of the Income Tax Act. Now, is the item moving? Is the slides are moving? Hello. Can I proceed,
Moving,
please?
sir.
Yeah.
Moving, sir.
Yeah. So initial coin offerings. So this is one of the, like, initial public offering we have for the shares. Similar to that, we have initial coin offering. Somebody is offering a coin for the first time. If you are going to, as an investor, you're going to take that offer for the first time, and with the intention of that token value will get appreciated in the future, then that item will be treated as a capital asset in your hands, and again will be taxed under capital gains. Like your shares, when you apply for shares, now that there is a big news saying that LIC is going to be getting listed down the line. When it is getting listed and the government is going to offer the shares for the public, it is called as initial public offering. With LIC, you can become a shareholder of the LIC when, as and when the government initiate the process. Similar to that, when somebody is issuing a cryptocurrency as initial coin offering, and when you are the first investor, you're going to invest it in the coin, then you'll be treated as an asset in your hands, and correspondingly the Income Tax Act will treat it as a capital gain. So what will happen in the hands of the issuer? I'm saying both from the point of view of the investor and also from the point of view of the issuer. So I'm saying the both sides of the coin. So similar coin has two sides. I cannot just say that only one side of the coin. Now I have to tell you what happened to the issuer. It can be treated as a capital receipt, similar to an IPO. Suppose if company issues shares to its the share to the members, to the public at large, what happens here is, it is not treated as a revenue receipt in the hands of the company, so it is not taxed in the hands of the company because it's only a capital receipt. Similar to that, if ICO will be treated as a capital receipt in the hands of the issuer of the coin, correspondingly it will be taken as not an asset, not as a currency taxable item. Or if the amount is received as an advance, suppose it is not issued as a coin offering, but in the future you're going to get some service from that fellow or from that person, or product is going to be offered, then the company may treat it as a revenue receipt and it will be taxed as a business income. Suppose you are rendering service as a cost accountant for a cost audit. Down the line, there is a situation wherein a person may may transfer the cryptocurrency to you, and you have to offer it as a tax as your income from business or profession. You cannot say that it is not taxable, it is not income, because you have rendered a service, though you not received the money in rupees, but equivalent you have received in the form of a cryptocurrency as a chartered accountant or as a cost accountant or as a company secretary. When you render a service, then it becomes a business, professional income for you. When you render a professional income, you have to offer it as a tax under Section 28 of the Income Tax Act. Automatically it get attracted, so you have to pay tax accordingly. So either way, as an investor, you will have a capital gain, or as an issuer, you have to offer as a business income in your hands as a revenue receipt. Now we all discussed a couple of minutes back mining. So how the miner will be treated? Suppose if a person is awarded a Bitcoin for the complex mathematical problem which he is solving, so for that he is given a reward or award in the form of a currency coin, Bitcoin or Ethereum, whatever you can say, then that will be taxed as a income from business or profession, because you are rendering an activity. So all the expenses relating to that income, like your computation power or the power used for that, on the infrastructure used for that, all those things you can claim as an expenditure against your income, and the net income will be taxed as a business income. So income which earned from the mining and which in the form of a cryptocurrency or crypto coin will also get impacted. It is not out of the ambit or out of the radar of the income tax department. Suppose you say that I am not doing regularly, but I'm doing once in a while. Very good. Thank you. Thank you for doing that. Thank you for being a digitally savvy person. Thank you for being a digital citizen of India. Please pay the tax as income from other source. So you will not be left out just because you're doing it casually. Even casual income is also taxed. Suppose you win a lottery, it is a casual income, it is taxed. It is not left scot-free. So that means when you do a mining, when you get a currency in terms of a cryptocurrency, Income Tax Act. Again, we'll come back to you. These are all the, I'm not saying that this is the rule that has been framed as the moment, but these are the possibilities that how in the light of the law that has been prevailing in India, these are the things that may come in play. Probably the government may also give some exemptions up to certain limit to felicitate or facilitate or give an incentive for the digital transactions down the line. But these are the, but in the broad counter or broad aspects which all as professionals we have to know, there is a possibility that it may get taxed either as a business income or as income from other source. Now, as I said earlier, to conclude my presentation, so a lot of clarification will have to come from Government of India, because this is only enabling discussion. So what are the things that may go? So we always have a what do you call it as, we are enablers of the moving of the nations. So as professionals, we think ahead of what could happen, what may happen. So that's our bread and butter. That's where we add value to our clients. That's add value to the society. That's add value to the nation. So as professionals should be ready with answers. So thanks to our institute, which has given the opportunity to discuss briefly on this. What is the impact? So basically, when a person will be treated as investor or trader in cryptocurrency, how the person will be treated by the government, whether CBDT circular can be taken as a guidance, which provides that an option the taxpayer can take if the income from sale of share is business income or capital gains. So as early as 6 years back, 5 years back, the CBDT had a lot of associates had dilemma, whether should I say that if I'm dealing in shares regularly and I'm doing a lot of transaction in the capital market, share market, should I offer it as a business income or should I treat it as an investment? So some guidelines have been thrown or given by the CBDT, thrown some light on the aspects. Similar to that, we have to look into what type of circular we'll get from the department, whether to treat it as a trading activity or treat it as an investment. We have to look at how to compute the fair value, market value when there is no uniformity here. Each Bitcoin is different. The rates are going to be different. Different crypto exchanges are there. How are we going to monitor that? It is not centralized currency. It's not centralized. It is not backed up by some government or something like that. So a lot of, not only for India, but also across the globe. When I'm coming across, I've went through some of the websites of the other governments, they had to come back with how to treat this. So government is also in a learning phase. If cryptocurrency are treated as business income, any gain or loss due to fluctuation currency, whether you treat it as a, now foreign exchange, you're treating it differently, you allowed as a revenue expenditure. If it is against a capital asset, you allowed to capitalize. So how we're going to deal that, we are not sure on that, but there is a lot of clarifications required. So in Australian taxation, as I said earlier, is they're saying that cryptocurrency is a personal asset if it is kept or used mainly for purchase personal item or consumption. This is the latest standard taken by the Australian Tax Office. If you're not going to use for any other purpose, only for personal consumption, they're not going to tax you for this. So let us see how the things evolve. As I said earlier, El Salvador, the first country in the world, they're the first mover to accept the Bitcoin as the legal currency. Other countries in the world have yet to do that. Let us see how other countries slowly follow it. Now, this one is on security token offerings, similar to your IPO. This is also similarly they are using token to regulate the transactions. I'm not going to deal much in that because it's a little technical subject. I'm just moving out. T0 is one company which has completed the zero token security tokens. The investors who want to invest it, they signed an agreement with the T0 and they raised 134 million from over 1,000 global investors during the first security token offerings. It is a decentralized public network and was conducted in full compliance with the US security law, wherein similar to your trading of shares, this security token offering will be traded publicly and in the cryptocurrency, in the blockchain platform. Let us see how things goes up. With that, I come to the end of the presentation. We had a quick recap of what is the blockchain technology, what are the advantages we had, like the traceability, auditability of the transaction is there. It reduces the cost. A lot of applications in the blockchain, especially in the cost accounting record rules, wherein we can put our thought, put our time and effort in using the blockchain technology for our own cost accounting records, be it material accounting, be it labor accounting, be it overhead allocation. All these things we can use blockchain technology. And basically, we had a long discussion on how we have to account in the books of account, whether the standards are there, so it's being developed, and the likely impact of both the indirect tax and the direct tax on the cryptocurrency. So that we discuss today. With that, I come to end of the presentation. Any questions? I'm ready to take. Thank you so much for the patient hearing. Thank you for the opportunity.
Thank you, sir. Thank you very much for educating us. Sir, me personally have learned that traceability for vaccination is possible for blockchain. This has really energized me. And the second thing is speed, quality, and cost. These three aspects are very much useful for our cost accountants. Yes. One more thing, European Financial Advisory Group. That is also a very good idea we have hired today. And sir, there are few questions have come. Shall I? Tell you the questions, or
please go ahead. Please go ahead. Yeah.
Sir, one question from Mr. J.C. Patra is that there may be transactions between related parties which is not authorized and transactions not under proper accounting head.
Okay.
Etc. Still are not sorted by blockchain.
Guru Prasad, sir, if you don't mind, you can remove the presentation.
Yes, sir. Yes, sir. I'll just remove the slide. Yeah. Thanks.
Sorry.
No problem. Thanks for that.
Yeah, please.
Yeah, now it's okay. Yeah.
This is the first question, sir. Shall I go for the second question?
No, the first question. I'll answer the first question.
Okay.
The very purpose of the blockchain technology is it removes the reconciliation itself. That means two parties, whether it related or unrelated, will have one common ledger. That means the bank and yourself, or it could be a debtor, or as I discussed in the previous session, some of might have missed. So yes. What happens is one single ledger will be kept, and when I enter into a transaction, the other person, first I will upload the transaction, I will enter the transaction, the other counterparty will accept it. Only when he accepts the transaction gets completed, that means it becomes a complete record by itself. So when there is a related party transaction, there is also timestamp. There is also cryptographically, nobody cannot just like that upload the transaction. So all the miners will come to a conclusion, agree to agree, then it becomes a completed transaction. Whether it is related party or non-related party, it doesn't impact. It just helps you to ensure data is being free from error and fraud. That is the advantage of blockchain technology. And you can verify at any point of time. Even at midnight, you may get some alert saying that some person had tried to tamper the data. Immediately you may get an alert as well. Like as you get alert when somebody withdraws money. 2 days back, I read in newspaper saying that someone got alert at midnight that his amount has been withdrawn from the bank. So immediately he had to take some action to stop further damage to his bank balance. Similar to that, you may get some alerts. Suppose related party is a very, very technical subject and it's a very, very sensitive matter. Be it income tax department or in, if you see this GST, there any related party transaction viewed with the lens, magnifying glass. So as auditors, we also check whether there are any case for siphoning of funds or when you do the bank audit, when there is any scope for misuse of the related party transactions. So we always look those transactions first. So this will be of great help when you use the blockchain technology, wherein either one can only falsify the record, both cannot falsify the record, and there is no need for reconciliation. That's the advantage.
Thank you, sir. The second question from the same person comes. Yeah. Do all cryptocurrencies acquired are supported by physical currencies?
That is a beautiful question I could ever think of. It is not backed by any asset. That is the risk we all face in the cryptocurrency. So what happens is purely based on demand and supply. That is, if somebody needs that particular currency or cryptocurrency, he is ready to pay that money. There's no underlying asset. That's why it is banned across the globe. Even US, which is the most advanced country in the world, has not allowed anyone to use cryptocurrency for trading or doing normal trading activity. Only it's used by the darknet or somewhere. So they are not using it for the day-to-day normal transactions. That's why even US countries like China also has banned the cryptocurrency, they are going to bring. They already brought a official yuan as a digital currency. There is no underlying asset. That is the beauty of the. That is a drawback of the cryptocurrency value. Yeah.
One more question from the same person, sir.
Great.
Government may ask the list of holdings of cryptocurrencies as a specified date to crypto authorities.
Yeah, actually, we have Schedule 3. The companies will have a lot of cryptocurrency. Individuals may not have. At the moment, the Ministry of Corporate Affairs want to take your data. See, once you give a information, so they will collect all those things will be pulled out from your balance sheet, and they will have a data analytics done and see which is the country, which is the region, maybe Maharashtra or Hyderabad or Andhra or Karnataka, which is the region which is using most or holding most of the cryptocurrency. So they can capture that data. When that data is captured, they will transfer it to our big brother income tax department. So they will come back and check whether have you that asset is backed by some proper this one. Is there any money laundering is there, or the asset has been properly impacted. So money laundering is one of the things which the government is looking at, because there is no central observer, like there is no central bank issuing the currency. That's why they always want to now track at the major level. Now, once they do that, they'll deep dive into even the income tax department may deep dive and ask you to even show that in the income tax return. There is not there is no what you call it as it is not a very distant possibility. It may happen so soon.
Sir, one more question. Transactions in cryptocurrencies or capital assets are taxable as per US experts. The person has referred that he has learned from different seminars.
Can you please repeat it?
Transactions in cryptocurrencies are capital assets.
Okay.
And are taxable as per US experts.
Okay.
So is it correct statement he has asked?
No, actually, I will come to that. Joe Biden, the new president, is set to release his budget. On that, we'll have to see that what is the stand the new government is going to take. At the moment, I don't have. These are all what you call it, speculation or not yet completely what you call it as has not been streamlined. In the next few months, we may get some sort of idea as to whether how they're going to tax it. But basically, as I said earlier, every government want to have a share in the pie of the income. So they may also treat it as a capital asset, and the capital gain will get taxed.
Yeah, last question, sir.
Yeah, please.
Asked by GS Bharma, CMA GSK Bharma. Any data or reports on study of TCO for the records maintained in blockchain system?
Can you please repeat? I'm not able to follow it.
Sir, any data or reports on study of TCO for the records maintained in blockchain system?
No, as of no, because it's all evolving. So we have to see that how it is going to happen. So everybody's in a learning phase now. Learning curve has started. So it's good. And as Murthy sir was saying today evening, in fact the COVID has hastened the process of digitalization of the whole world. Maybe you would have done it 2-3 years down the line, but the COVID has hastened the process. So everybody is now seeing that they want to broaden their income aspects. They want to get closely linked with other countries. They want to trade in a better way, in a secure way. So blockchain technology is going to help in a very big way. So all the countries are also putting a lot of money and effort in learning it, and also providing infrastructure facilities to ensure that internet is the more robust. We are going to come with 5G technology rolling out. Ashwin Dalwadi was saying, saying that technology is going to take a leap and leap bound, because the technology which is going to the platform which is used earlier, now it's going to be different, and government is going to get a lot of benefit. Actually, everything is getting tracked, traced, audited. So that is the advantage of this blockchain technology.
Thank you, sir. Thank you very much for your nice deliberations and educating us. Now I am just over to Dr. Murthy sir for summing up and paying vote of thanks, sir.
Good evening to all of you. Sir, on the eve of Teachers' Day tomorrow, one day advance, you have proved to be a good teacher.
Yes.
Being teacher, you have taught to all of us what exactly the blockchain. You have also gone take us to June 21st, July 21st lecture, and from there you linked what you have told on the day to till today, and you have given us a very good recapitulation and the subject. On my personal behalf and on behalf of our this committee and institute, I sincerely thank for your wonderful lecture, sir. Say data is the ultimate thing. Data is nowadays asset. Data is more important than the world, than the country. That's what the people say. Data is more important than even the population, the country's population. That is what people say. So data has to be secured, and data has to be saved. And you write to use those two words, the important words, fair and true of the that is the ITS language. And in our fascinating word, distributed ledger. Yeah, this is not ledger was earlier only with only one person who was not revealing to anybody in the world except ITO, that too on in a forceful manner. But this ledger is available to everybody in the country, and you have also covered these principles of cost, like with speed, cost, quality, efficiency, traceability, transparency, flexibility. These are the assets of the cost accountant. How you also told us how it will be useful to cost audit, all the records of material, labor, and overheads. A big thanks, sir. You also touched non-costing aspects of music and yoga in your lecture and given live examples of them. Cryptocurrency, Bitcoin, accountancy, taxation, and what are the various countries which they develop, where which is the stage. Some are in infant, some are advanced like Australia, Europe, Australia, everything. And they also told us the accounting taxation aspect of the cryptocurrency. All 80 points issues are still to be settled, and standards related to these two things, and also implication of FEMA, and also both direct and indirect taxes, sir. A big thanks to you. And if you see the latest program of Government of India, Digital India, which has got 9 pillars, everything they talk about only technology, technology, technology. My pet subject of my colleague in the council, Ashwin Dalwadi. Technology. There is no world without the word technology. Again, if you see two words imported by that Digital India initiative, they don't talk about cost economics directly. They talk about net zero imports.
Okay.
And they talk us to eliminate cost disadvantages. They did not specify like material labor, but they told very clear that remove the cost disadvantages. That is job of a cost accountant. Secondly, skill development is one more area which has given importance in the this 9 pillar Digital India. We as institute are already promoting all over the country. There is a course called CAT, Certified Accounting Teachers, which is very good. We are receiving very good response from all over the country. I can't give you figures right now to you, but we are going to have very good achievement in this CAT. We are also implementing skill development program of the Government of India and the various governments. So, on my friends' behalf, a big thanks to you. Today, we are celebrating Teachers' Day with a teacher's excellent presentation on this subject. I know I heard you many times, but I also it has given a impetus to all young. You have referred to budding cost accountants many times. Being senior, your aim is to educate, encourage the budding cost accountants. That's what exactly we do. A big thanks to you. And before your speech, my colleague in the council, Ashwin Dalwadi, we call him as a man of technology. He is our IT chairman, and he leads us. And just for the information of both of you, Maharashtra government is implementing blockchain technology in certificates. Duplicates. Normally, we unfortunately we find many people using small certificates. So they are using blockchain technology to stop the misuse of the certificates. My friend Dalwadi has put a set right tone as a keynote speaker. He has put you on the right track, meant to a track for you to read, not right track, a track for you to read more rightly. Thanks to Ashwin Dalwadi sir. My Vice President is Raju here, always a man of subject, man of implementing all these things, has also given good insight about the this subject. And my beloved president, who is always bothered, the being first man of the institute, always bothers about first the welfare of the all cost accounts. He always opens with our inquiry of welfare and gives us advices with reference to keeping the COVID protocol into account. A big thanks to my president, big thanks to vice president, big thanks to my colleague and dear Mr. Teacher Guru Prasad ji. And also I thank Sumda Chakravarti for excellently organizing this program. And more than all of you, I thank all my CMS. They have taken their Saturday evening, normally a day where they can enjoy with the family, but they're given time to us in the view of this importance. A big thanks to every one of you. Hope definitely we'll have much lectures from Guru Prasad ji. If not blockchain, some technology, we will have more and more wonderful sessions in future, sir. A big thanks to every one of you. Thank you.
Thank you, sir. So may I ask our team to have the national song to play the
Yes,
national song,
yes.
please.
If you still have got any questions, kindly send them to Mr.
Yes,
Guru.
sir.
Yeah,
Yes,
please.
yes, sir. Yes.
I thank the president for his time, taking his time off, and vice president despite their busy schedule on evening. I thank all the council members and Murthy sir, Darwadi sir, Smita ma'am for their time and
Thank you.
encouragement. And it is a great privilege to be addressing the larger audience across India. So thank you so much. I look forward to many more this one to share my knowledge and experience with the institute. And with that, I wish you all a happy Ganesha festival as well, which is going to come next week.
Yes.
Happy Ganesha festival to all. Let Ganesha remove the obstacle of the corona. Let it all go away. Let us have a peaceful time. Thank you so much.
Thank you, sir.
Before national anthem, may I request our IT expert, Dalawadi sir, to say a few words? Dalawadi sir, you are IT expert. आवाज नहीं आ रहा.
See, fundamentally, I am not an IT expert. Let me tell you very frankly. But yes, I am more interested in understanding and using technology. That is my personal interest. So I am not an expert on IT technology particularly. I am basically a cost accountant. Number one. Number two, see, let us look at the world where we are moving. Because during the discussion, I noted that see, in future, our fraternity of accountants and auditors is likely to face a lot of music, because the computers are going to take over all this compliance aspect. Very simply, in a nutshell, if I say, now we all know bookkeepers have gone. Bookkeepers have gone. Correct. Now, in a company, only professionals, basically managers, are being employed, not the accountant at a ground level. Correct. If you are naming them, this is okay. But in future, they will vanish, like stenographer community. So, and same thing is going to happen with auditors. Because compliance, what do we do? We are providing assurance that whatever is being presented to you in form of financial records or cost records or whatever we say, it is providing some sort of strength, the truthfulness, stamping. Correct. So, as we have seen today, blockchain technology itself is going to provide. So the compliance part is also, according to me, it is going away, because computing and technology has become so advanced and easily accessible. So that is where the AI and bots are coming.
Yes.
So that they are going to take over our fundamental activities, basic activities. For example, we are auditing our cost audit in our cost auditing report. We say that I have followed the cost auditing standards. Now, if these are put into the system itself, all violations will come up. And I put it this way: machines are really indifferent as compared to human. So as a human, I may try to ignore or cover up something, but machine will not do.
Yes, sir.
So let us concentrate more on technology part in our curriculum also, and even our training also, skill development also, because without that we will not be able to survive.
Very good.
And second thing, what I look at it, that there will be super specialists always in our area. So the cost accounting or accounting profession is not going likely to go away, but only few super specialists will work on this. So look at the current situation, because few years back, at least we with gray hair, we can find that during our young age, we found several general practitioners, medical practitioners. Now, over a period of time, the population has increased. But do we know, I mean, can we confirm that with that speed, general practitioners are emerging or
Yes.
growing? No, it is not there. Why? Because now these are the days of super specialists. So we are finding specialty hospitals, specialty doctors,
Yes, sir.
and super specialists. They are earning fantastic amount. Correct. So this is also, we are also moving in that direction, and blockchain is going to be one of that also, because today we discuss about this part. No, the past, the what we call it. Once we have taken vaccination dose, we are provided with a pass, which is based on this global uh, system, blockchain. Because of course it is emerging, but it will take care of all such thing, and it will be easily available. Now look at it. In India, how many people have taken double vaccines, and how to trace them? Was it possible earlier? No. Now it is with your mobile only. So
Yes, sir.
we are supposed to be technology savvy. That's
Yes.
all. Thank you.
Okay, sir. Thank you very much, sir. Now I'm requesting our team to play the national song, please.
जनगणमन अधिनायक जय हे भारत भाग्य विधाता पंजाब सिंध गुजरात मराठा द्राविड उत्कल बंगा विंध्य हिमाचल यमुना गंगा उच्चल जलधि तरंगा तव शुभ नामे जागे तव शुभ आशीष मांगे गाहे तव जय गाथा जन गण मंगलदायक जय हे भारत भाग्य विधाता जय